Hey folks, how's it going? So it's Sunday. I've got a really crazy busy Monday, Tuesday, so I thought I'd make this video now. And also there's a fair few newer members in the community, so I thought I'd just get a few basics out there, and even for the more experienced people here, it's still probably worth watching. So the kids are finally relented. I said, right, go and play Minecraft, just leave me alone for half an hour. So if we're interrupted, yeah, I'm supposed to be on daddy duty here. So what I want to quickly go through is activities according to cycle phase, deriv trades, and then balancing the fundamentals with tea leaf reading. So first of all, let's talk about the activities per cycle. So there are a lot of, I guess, new people to crypto, and what crypto has done is it's brought normal everyday Joes to investing who have never invested before, and crypto is the first thing they've ever done, and that's like going from zero to, I don't know, snorting cocaine off a stripper's body or something like it's absolutely nuts. For those who've been around, like we've thankfully had a bit of a nice lead into crypto. You know, if you start off on stocks and then, you know, you start work up. But these days, people are going from zero knowledge, nothing, and straight into crypto, which is just like bam. And then there's so many different things you do with crypto that you never do with TradFi. So it's, yeah, and it's taken a while because, you know, I'm a very conservative trader, conservative investor, etc. So it has taken me a while to shed TradFi activities or TradFi techniques which just don't work in crypto. And so one of the things that you have to understand at the moment, you know, this is one of the biggest debates out there in crypto or Bitcoin world, is that, you know, whether you like it or not, we have these cycles with Bitcoin. Okay, so these are the fractal cycles I made in 2017. Now, back in 2017, when I came up with this sort of cycle, and it seems like the Twitter and the internet has somewhat copied it. It was very limited back then, because when I came up with this, I was like, it's possible we got these cycles, because, you know, it was around sort of 2017, or sort of really 2018. Like none of this, we couldn't see any of this. So really, all I had to go off was sort of a funny-ish cycle over here, some sort of cycle here, and then, you know, we were sort of projecting up. And over time, it's really presented itself as, okay, we've got these cycles going on here. And, you know, I've always said this is the last sort of predictable cycle. You know, over the next 18 months, we're going to have, let's say over the next 24 months, we're going to have AGI that's going to be born. A year after AGI, we've got ASI, and that's no different than aliens landing on Earth. You have to really think of AGI and ASI as the event horizon that no one can see beyond. So for us, it's really, okay, we've got probably most likely one last predictable cycle, and then God knows what happens, because, you know, I've said for years, we've got banks, billionaires, countries, corporations all flowing into it, and it's that domino effect is slowly going in. Now, hopefully, Trump will follow through with what he said, and they're going to be buying 1 million Bitcoin over 60 months, starting in January, which is a lot. You've got Michael Saylor's ploughing in another 43 billion into Bitcoin, so there is going to be a huge supply squeeze. So obviously, up until, you know, this event horizon, etc., we have to, in fact, even beyond it, there are certain things you have to do with crypto. So if we just take a typical cycle, which is, you know, you have the halving, it goes batshit nuts for a year, batshit nuts for a year again, but the other direction. Then you have this like sort of choppy phase, then the halving, and then it goes nuts again. So you have to do things distinctly different. So let's just start with the bear market, okay? Let's just start over here. So in a bear market, you don't know, you know, to begin with, whether it's a reversal or a pullback, and it's only a little bit after time when you get sort of like a major base support breach that you go, okay, this is a reversal, not a pullback, and then you start, and so here you can do active shorting, but hopefully before you do the shorting, you've sidestepped, okay? And when I say sidestepped, you basically go to cash, go to Tether, go to the stronger stablecoin, and you basically you wait. Now, historically, it crashes hard for a year. As we know, it always hits, plus or minus 43 days from the 1st of December, previous to the crash. And all the peaks have hit plus or minus, was it 23 days? So let's just, rough rule of thumb, let's call it plus or minus 2 months from the 1st of December, okay? For the highs and the lows. So during this red phase, you just got to sit in cash for most of it. I remember the last cycle, we sat in Tether for the best part of 15 months. Everyone got frustrated. It was like people prodding me with a stick saying, Siam, do something. I was like, well, I am. Being in cash is a trade in itself. It's me saying, I being in cash is a stronger trade than being in crypto. Whereas, hodlers that just hodl completely throughout every cycle, they get smacked in the face during bear markets. So yeah, and then you can do some selective shorts as it goes down. And then again, you don't really know the Pico lows, and it's only until again a base resistance breach here, and you go, okay, it's no longer a pullback, it's a reversal, but to the upside. And so it's around here in sort of into this yellow phase, you start allocating. So you start getting back, you start building up positions into the next narrative, and you always have a heads up what the narrative for the next cycle will be. So for me, I've always been AI. Is the 2025 cycle is all AI, AI/fair launch stuff. So that's why I've gravitated very heavily towards Kaspa and BitTensor, because they're fair launch stuff that they've been building heavily during the bear market, and obviously I'm more heavily weighted to BitTensor because it's the king of this category. And then you spot, and you don't, and it's hazardous doing derivative trading because it's very choppy, etc. And then you have the halving, and then when you get into the green zone, which is where we are now, folks, is now you can obviously you lever up your positions as much as you can over here. Even in the real world, you go out and raise debt. So all I've done in the real world is borrowed as much as I could personally, and with corporate debts, corporate loans, and I've loaded up my positions in this yellow phase. And then once we're in the green phase and it's confirmed, then derive your heart out. And trading really is all about, you have to try and cheat the market as best as you can. When I say cheat, you have to put as many success probabilities in your chuff as possible. You want as many things pushing the trade in your favor as possible. So that's why when I don't do any derivative trading. I do a little bit of shorting in the bear markets, and then in the yellow zone I don't do any, and then it's in the green zone I basically open up the accounts again and I start going nuts, typically going long most of the time, because you've got as much tailwind as possible. And to be honest, in this green zone, blind monkeys throwing darts at a board of random crypto will do well. Okay, so anyone looks like a god during this green zone. So so that's what we've been doing since really August time. I cracked open the futures account, and we've been trading. So if we look at the charts right now, this blue projection was originally what I thought. And with the launch of BlackRock's ETFs, I think really what that did is just massively accelerated it, and things are starting to pace out. I think realistically, I have actually changed my prediction recently. I'm thinking it's going to be a lot closer to 300k than 200k, but again, it's still plus or minus 100k. But long story short, it's Bitcoin's looking pretty bullish now that Trump getting in is very bullish, because they're going to get rid of choke point 2.0, where they've been trying to throttle everything. I've had it recently, so literally a couple of days ago, Santander, I did all my business banking with Santander. They just closed all access to my accounts. They said when or if things are resolved, we'll give you a call. I'm like, what? So I now can't access funds through any of my business accounts. They've literally held my cash hostage, and time after time my accounts keep getting closed down. Barclays are kicking me off, looks like Santander is going to kick me off. So hopefully this is the end of this sort of cryptophobia. It's very early in the day, but long story short, we're well and truly in this green zone now. You typically have volatility post halving, and we've had that. As you can see, we've broken free of this resistance now, and now we're up. Now the trader in me thinks, oh, it's overextended, wait for a pullback. But you know what the cycles have shown us, if we go back to the cycles, is that when we get in green zone, you got to expect massive overextensions where traditional technical analysis sort of goes out the window temporarily. Like, look at this massive overextension for a fair time from, October 2020 to really Feb 2021. That's and in the previous cycle, look at all of this. I mean, you will have 30% corrections during crazy pumps. I mean, look at this from here to here, 38%. You have them all over this bull market. So you shouldn't rule that out. But in the green zone, when you have these tree shakes, treat them as tree shakes. That's literally all it is. So could Bitcoin go from 90K back to 75-ish? Yeah, it could. It could be an awful tree shake. Just treat it as a buying opportunity. And so I guess I'm sort of skipping forwards here. Balancing the fundamentals with technical analysis is tough, because sometimes, and that's the nuance of trading, you've got to know when to listen to which one, the fundamentals or the technicals. So at the moment, now we're entered crazy season, technical analysis, parts of it, you've just got to ignore, and this is where fundamentals sort of kick in. But again, with the fundamentals, all fundamental sort of data points have their own time frame. So you can look at something like, all the big macro metrics I always go on about. They have a much bigger epoch for things to flow through, like the global liquidity cycle starting to spurt north, all that sort of stuff. At the moment with a lot of the, every day we're having some sort of, pump down or pump up. Just treat it as a bit of a shock, or just a tree shake. So here, if we're looking at Tau, for example, what if we go onto the log chart here? So these little lines are what I'm hoping, and this is really not technical analysis. This is just more pattern recognition. And you have, and I'm not calling this at all. This is a like, and this is more of a question mark, whether we get the wee bit, just like we had the wee bit up here. I don't know. I mean, purely, if I was just doing pure technical analysis on Tau right now, I'd be quite bearish, because if you look at this on the 12-hour, you're getting what looks like the perfect head and shoulders here. So there's absolutely nothing stopping it from going back to the 400 level from a technical point of view. But knowing, again, pattern recognition with Tau is that often these are somewhat faked out. So typically when you see a blatantly obvious head and shoulders on Tau, it tends to buck the trend. So here, if we just get rid of some of this, let's just get rid of all of it. In fact, there's another one here where you have head and shoulders here, you have the neckline here, but what did it do? It faked out to the upside. Again, I think it's done this several times where, it's a bit shit. No, that double top played out. Again, here, this is another one where you had a sort of neckline here. It faked out to the upside, stops everyone out, and then it did bleed. So, yeah. In fact, here again, you have another sort of topping pattern, neckline, faked out, and this one, it really buggered off. So, take it for, with something like Tau, where there's so much innovation going on, it's technical analysis can go out the window. I mean, SN19, I think, has the world's fastest compute inference, which is just absolutely nuts. It's tough keeping up with subnet alpha, or it's tough maintaining subnet alpha because there's all sorts going on, and it's soon going to be 64 subnets. Anyway, so that's quickly talking about that. So for the moment, going back to the cycles, we've got our spot position. We've had that, you know, for a while now, as those in the community have been around for. And I'll continue to hold it. Now, what we've been doing since August is really just going nuts with the derivative trading. Typically long, we have done some shorts. So again, it's hard to see. So I use Mexi, obviously. I personally don't like having this much on Mexi, so I'm actually thinking of just siphoning as much of the profits out as possible. I've still got PTSD from having too much money on exchanges. But if we just go to, how can we find the stats here? If we go to wallet, no, capital flow, normally it gives us, if we scroll down enough, here we go. So if we go to capital flow, funding order trade, I think that's the funding fees. 1 second, everyone's different. So if we go back to, yeah, August the 20th, we started, take it to now. No, these are the funding. Here we go, transfer. Yeah, okay, this is what I was looking for. So this is what I've put into the futures trading account. So obviously you've got to transfer it from the spot account to the derivative futures account. Now, if you add all these up, I've done this before, it's about 196k. So I started, as I said, I wanted to start off with 200k, but I think it turned out to be 196, 192k, something like that. And then if we look at order and trade, no, position history, no, where is it? If we go to wallets, futures, God damn it, funding, future statement, there we go. No, it's just taking us back to completely where we were. I'm going to pause the video and try and find it. Be right back. I found it, sorry. You go to futures, go to USDT, which is our main page here. And it's this P&L analysis button here. So you click that and it will show you everything. So if we just put in from when we started, which was August 20th. Oh no, let's just do recent 180 days. That'll cover everything. Yeah, so as you can see here, this is what the chart looks like. Now again, it's messy, there's lots of volatility because a lot of the trades that we've been doing, or I've been doing, are swing trades and or positional trades. So for example, if you look at this towel trade, I set it up at 313. I'm just letting this run. So there are times on this towel trade where it looks batshit crazy. Effectively, we got in at 313, somewhere around here, and there have been times where it's been amazing and it's come back down again. So at one point this trade was like $250,000 up. Now it's, you know, we've retraced a fair bit recently, so it's a bit down. But yeah, so the volatility is all over the place. But long story short, it's positive. So we started with 192k. We're at what is it now? 430-ish. So made 230 odd, but it's all floating profits. So some of them are shorter, like for example, yeah, like Render, Near and Tron are going to be much shorter term trades, and we've got some, you know, even towel shorts that I've done. So I have shorted towel, like here's a towel short. I don't know where it went. It's here somewhere anyway. Yeah, and I completely forgot what I was going to say. Derivative trades, yeah. So you have to understand what you want to do. So it's worth having positional trades to effectively put the jacks up under that, under your position to lever it up, and or play around. So I want to talk about the recent trades you've done. So obviously, been pretty much gifted with TRON. This TRON trade, it was a lot lower. I got negatively or positively slipped with that one, so I'm just going to let it run now. But thus far, it's a 7.2 R trade, and we've got a lovely halo here, so it's most likely going to keep on going up. And you have to put your feelings and opinions aside with trading sometimes, because I think TRON is corrupt and dodgy as shit. But again, this is just a pure charting thing. So the reason we got into this one is that, I thought mean reversion back to this support here, and we want to go long. And originally I wanted to take profit here, but now we're entered silly season. It's we're gonna let this run for a bit. With the near and render, so obviously I'm very bullish on AI. I don't own any near or render in terms of spot tokens, but these are just little positional trades. So near entered here, waiting for the pump up. We've had the pump up, and there's no take profit, as you can see here. I'm just letting it run. So we're gonna just let that go. And we've got this little this bottoming, whether you call it triple bum or whatever. It's just a bottoming pattern with some sort of bum line here. So we've got to let this run now. So I'm going to monitor that, because the lick level I've got down here is, I think it's safe, but it's still relatively close. The markets could nuke and I could just get wicked out there. And then render, again, pretty much almost exactly the same picture. You can see the near. So really, I'm just going long in AI. We got pretty close to the wire here. There was a day where it looked game over, but thankfully it's retraced. And we've got a lovely halo here now. I absolutely love that low test. So breaking north of the bum line, that should pop up nicely soon. And then, we've got the TRON one. So, we're just going to let it run. So obviously a lot of you are trading the meme coins, etc. Murad's meme super cycle. Personally, I think it's going to be it's a retail honeypot. I think retail is going to get absolutely clobbered. It's not a meme super cycle. It's a meme echo chamber super cycle that VCs are literally seal clubbing. I'll explain this in the cuddle next week, but retail is going to get absolutely whacked with retail, with 0.1% that do really well, and it's the VCs. This is not a retail push, folks. This is coordinated shams. This is on a large scale, but just wait for that presentation next week. Regarding Kaspa, so again, been out of Kaspa for a while. A long while. As you can see, a lot of the moves have come true. Until Kaspa sort of breaks out this noise area, I'm sort of not interested. For my attention, it needs to break north of 19. It needs to, or even break south of 12. But this area is just a bunch of noise. So until then, I'm happy sat in Tau. And also the main thing is I'm looking at this Tau-CAS ratio. So I think over time, Tau against Kaspa is going to break into this massive aubergine. Yes, I've put it a bit premature. It's probably, over the next, so if we just make it more realistic, it's going to be something like this. And we've got huge Russian doll sort of pancaking, bottoming patterns here. And what I'm expecting next is the breaking north of this falling channel here, but it's just broken south. So CAS has popped up recently, or literally today, which is why it's broken south. So once we hit this top bit, I said it was going to fall down and then bounce, but this bit is unexpected. So I'm just going to hold fire here. It's absolutely fine though, because I've flopped over most of the CAS into Tau around this sort of area here. But mind you, I'll keep an eye on that. But hopefully, I think this is all because Kraken Pro are going to be launching Kaspa soon, so we'll see. BitTensor memes, they're not going to do anything until Tau probably pumps up, so you just got to sit and hold really for these. And then obviously Bitcoin. So Bitcoin is again broken out that falling channel there nicely. If we look at the ETFs are just piling in. So this is the amount of Bitcoin that they're holding. Absolutely great. And so it's just got to go back to the basics. At the moment, this is the green season, and yes, there will be tree shakes. I wouldn't be surprised if there's a stock market crash. But for me, this is where we make our money. When we look at total crypto market cap, we always have a fall in compression just before silly season, and we've just had that. And we've just broken all-time highs for total market cap. So it's up to, we're going to see multiple trillions enter the market, which is way more than we've ever seen. I remember back in 2017, it was like 8 billion or something like that. And then we hit a high of 800 billion and we were going absolutely nuts. Not even a trillion. Things went nuts. Then the next cycle, we had a couple of trillion extra. And now we're going to have multiple trillions, and you're going to see crazy moves. Things that people think, can't possibly happen because of the last bunch of cycles. No. You're going to have at least another 5 trillion come in from where we are now. So people say, you can't see $30,000, $40,000 BitTensor. You fucking can, guys. I'm telling you now. If we get market cap to like 10 trillion, 10, 11, 12 trillion, you're going to see crazy figures for AI tokens. So, and then watching Tether, Jesus, and this is the most bullish chart ever. Every single time we see the breakout in Tether, Bitcoin follows. If we can go to the daily chart, you can see here, it's now outpacing even my line here. And this is what I said would happen a while back. So yeah, full pumpage, folks. The very near future is very bright, very bright. Right, gotta love you and leave you. Neglecting the kids now. Plus deliveries are going to be here any moment. So cheerio, folks. Bye.